The upcoming budget may bring good news for the cash-strapped realty sector. Sources say North Block is actively mulling tax breaks for real estate investment trusts or REITs. Draft guidelines for REITs were unveiled by the market regulator in September last year, but industry experts had written them off, saying REITs would not be successful unless the Finance Ministry played ball with tax breaks. Prime Property reports those very tax benefits for REITs may find their way in Arun Jaitley's maiden budget.
We had a public consultation. Our papers are ready. We are in dialogue with the government because REITs won't succeed unless there is clarity on the tax treatment. So we have represented to government. We are having a dialogue with the government, and our expectation is that the tax part of REITs will be announced very shortly.
Taking a cue from the rest of the world, India is actively considering tax breaks to ensure REITs are successful when launched in the country. The tax breaks could be announced as early as in the upcoming budget. Think of REITs as listed units of a mutual fund, where the underlying ownership is in a commercial or rent-yielding retail property. The rental income of the assets owned by the REIT is distributed as dividend to its investors.
I think the way to think about REITs is the companies which are generating rental income are the ones which are going to get benefited from this, and amongst the listed space, the companies which are well positioned for this are DLF, Prestige, and little bit in Oberoi's.
Sources tell Prime Property the proposal before North Block is to have a single layer of taxation with the investor. This means the Finance Ministry could unveil a one-time tax break at the time of the creation of the REIT, as well as exemption from withholding tax and dividend distribution tax. This is exactly what developers say is needed to ensure a successful launch of REITs.
The whole idea is for small investors to come and invest into these trusts, and one more investment opportunity for them apart from buying real estate directly or from trading in stocks, where rental income will be distributed as dividend. Now, the main tax that needs to be done away with for this is the dividend distribution tax. Otherwise, it becomes tax efficient. And if REITs in India have to be successful, the dividend distribution tax has to be exempted for this REITs.
According to the draft rules unveiled by the market regulator last year, REITs have to be registered as trusts with SEBI and floated as a real estate investment management company. REITs would be allowed to list on stock exchanges through initial public offerings. At least 90% of the value of the REIT has to be parked in completed revenue-generating properties, and a minimum 90% of the net income has to be provided as dividends to investors. REITs have the potential to rescue cash-strapped builders and also provide a new option to retail investors wanting to invest fixed income securities. This will be the second time in the last decade that India is looking to launch REITs. We'll know soon enough if Arun Jaitley will introduce the tax breaks his predecessor spoke of but never delivered. To get more perspective on REITs and what it could mean for retail investors, I reached out to EY's Associate Director Madhav Poddar. Here's that conversation.
Yeah, so one will expect that the Finance Minister announces the tax breaks as well as the policy measures on the foreign exchange side, and along with that, SEBI could finalize the REIT regulations and issue the regulations, because right now they're in draft stage.
Madhav, can you tell why REITs are considered a good investment option for retail investors? Why should they feel enthused?
Now, REIT as a product gives people like you and me a fixed income. It also gives us long-term capital appreciation because there's underlying real estate and buildings. And real estate, as you know, is a natural hedge against inflation. So it also gives us a natural hedge against inflation. So there are these three things which REIT brings in for the common man. Second, real estate as an asset class. A common man was really not able to make an investment into real estate as an asset class because of the prohibitive costs. REITs will now open this arena which was hitherto closed for the common man. So if you look at it from an investment product perspective, then these are clearly the benefits that a REIT brings into the Indian economy for the common man.
So you're making it sound like an excellent investment opportunity for people like you and me. But Madhav, investments in real estate today is perceived to be a risky business. Many people have lost a lot of money that, when builders did not get approvals on time, when projects have been delayed by months, if not years, Why should investors feel comfortable investing in a new real estate investment product?
In REITs, we are dealing with completed properties. So there are no risks in terms of approvals or whether completion will take place or not take place. One of the requirements of the REIT regulations is that 90% of the corpus of the REIT should be invested in rent-yielding properties. So you're pretty much owning rent-yielding properties with tenants with long-term lease contracts with tenants. Tenants pay the rent to the REIT and the REIT distributes that as income to its investors. So number one, there's very little scope in terms of risk as long as the acquisition has been done properly and the title is ensured that the title to the property and the land belongs to the REIT. The income distribution happens regularly.
So Madhav, in a nutshell, your argument is that the risk is mitigated as REITs invest in already completed assets and assets that are rented out. Now, from SEBI chairman to developers, they've all said REITs will be a non-starter if the finance ministry does not introduce tax breaks. You've been studying and analyzing REITs across the world. What are the kind of tax breaks, tax benefits that need to be introduced?
One of the key reasons why a REIT would be successful is that if the financial and tax impact is similar to the investor directly owning the real estate instead of investing it through a REIT. As long as there is parity on these two counts, which is the investor directly owns real estate vis-a-vis the investor investing in a REIT, if the financial and tax impact of these two are indifferent, that's when REITs will really take off. So what we're really asking for is a one-level taxation, which is only at the investor level, and no taxation either in the form of corporate taxes or withholding taxes or distribution taxes through the chain.
For the benefit of our viewers, can you illustrate all of that with an example?
So if one were to take a numerical example, let's say that the rental income is 100, the expenses are 20 and the REIT intends to distribute the balance 80. So there will be no taxable income at the REIT level because it will be 100 minus 20 minus 80. So it becomes zero. When this income is distributed by the REIT to its investors, there should be no withholding or distribution taxes. When the 80 is received by the various investors of the REIT, taxes can be levied in the hands of those investors depending on their status and their tax brackets.
Madhav, whenever REITs are launched, it's going to be a new investment product. Investors will obviously feel apprehensive. What all do retail investors need to keep in mind if they do decide to put their money into REITs?
What does a retail investor need to look at before investing in a REIT? Basically, what's important is that the portfolio of the REIT is robust. The management of the REIT has the right kind of experience, which to deal on the one hand with real estate, which means it knows how to pick and choose the right real estate, how to get the right tenants in there. And number two, it depends on the fund manager for the REIT. How good is the fund manager? So these are the two things that the retail investor needs to look at while investing in a REIT.
So from what all you said, it's pretty much similar to what mutual fund investors watch out for. At least that's what I've gathered. Madhav, can you tell us if SEBI in the draft rules has introduced any entry bar for investing into REITs? Is there any requirement for a minimum investment? Also, is there any upper cap?
Yeah, so the SEBI guidelines currently suggest that the unit size would be 1 lakh rupees per unit and the minimum subscription size would be 2 lakh rupees, which means a minimum of 2 units. And if you look at the SEBI consultation or the SEBI draft, the draft consultation paper issued by SEBI, SEBI has actually made a point that given that it's a new product, the high net worth individuals and institutions is what they're targeting at the beginning before it goes down to the retail investor. And therefore the minimum size, subscription size of 2 lakh rupees.